Most people think BNB is just a coin you use to get a discount on a crypto exchange. But here's what they miss. It's quietly become the fuel for one of the busiest blockchains on the planet, processing millions of transactions a day, and it has a built-in mechanism designed to destroy itself over time. That's right, billions of dollars worth of this token have been permanently erased, on purpose. Let me show you why. In the next few minutes, we'll break down what BNB actually is, the problem it solves, how the technology works, what makes it different, what the token is used for, and the real risks you need to keep in mind. Let's get into it. BNB started life back in 2017 as Binance Coin. The idea was simple. Hold this token and you'd get a discount on your trading fees on the Binance exchange. Think of it like a loyalty card for a store, but it didn't stay that small. Today, BNB is the native token of an entire blockchain ecosystem called BNB Chain. So it's gone from a coupon at one shop to the currency that powers a whole digital economy. If you've heard of Ethereum, this will sound familiar. BNB Chain is a fast, low-cost network where developers build apps, people trade, lend, and play games, and BNB is the fuel that makes all of it run. So why did this need to exist? A few years ago, using blockchains like Ethereum could be painfully slow and expensive. A simple transaction might cost you $20, $30, even $50 in fees during busy periods. For everyday users, that's a deal breaker. BNB Chain was built as a faster, cheaper alternative, new blocks roughly every 3 seconds, and transaction fees that are often a tiny fraction of a cent. The trade-off? We'll get to that because it's a big part of the story. Here's where it gets interesting. Most older blockchains rely on huge numbers of computers competing to confirm transactions. BNB Chain takes a different approach. It uses a system called Proof of Staked Authority, which runs on a small group of around 45 validators who take turns confirming transactions. Fewer validators mean the network can move incredibly fast and keep fees low. That's the upside. The downside, and pay attention here, is that a smaller validator set is more centralized. Fewer hands are holding the keys. We'll come back to why that matters. BNB Chain is also fully compatible with Ethereum's tools, which means developers can easily move their apps over. That compatibility is a big reason the ecosystem grew so quickly. So how does BNB stand out? Most crypto projects launch a token and then hope an ecosystem grows around it. BNB had something almost no one else did, an instant, massive built-in audience from the Binance exchange, one of the largest in the world. That gave it a huge head start in users, liquidity, and real activity. And then there's the burn. This is the part that makes BNB genuinely unusual. BNB uses an auto burn system. Every quarter, a chunk of BNB is permanently destroyed, removing it from circulation forever. The goal is to shrink the total supply from its original 200 million tokens down to just 100 million. Recent quarterly burns have wiped out over $1 billion of BNB at a time. The idea is simple. Supply and demand. If supply keeps shrinking while demand holds steady, each remaining token represents a bigger slice of the pie. So what is BNB actually used for? Quite a lot, as it turns out. First, fees. It pays for transactions on BNB Chain and gives you discounts on the Binance exchange. Second, it's used for staking, helping secure the network and earning rewards. Third, access. BNB can unlock early access to new token launches in Binance's Launchpad, and beyond that, payments, governance, and dozens of apps across decentralized finance. So this isn't a token searching for a purpose. Its challenge is almost the opposite. It's deeply tied to the success of one company. Which brings us to the risks, and there are real ones. First, centralization, on two fronts. The network runs on a limited set of validators, and the token is closely linked to a single company, Binance. If Binance struggles, BNB feels it. Second, regulation. Binance has faced serious legal scrutiny. In 2023, it reached a settlement with US authorities for over $4 billion, and its founder stepped down as CEO and served prison time before later being pardoned. The company operates under ongoing compliance requirements, and regulatory pressure remains a constant background risk. Third, competition. Plenty of other fast, cheap blockchains are fighting for the same developers and users. And finally, like all crypto, BNB is volatile. Burns reduce supply, but they don't make any token a safe bet. So here's the bottom line. BNB is a fascinating case study in how a simple discount token grew into the engine of a major blockchain, backed by one of the biggest names in crypto and shaped by a deliberate shrinking supply. Its greatest strength, that tight link to Binance, is also its greatest vulnerability. Understanding that tension is the key to really understanding BNB. Quick reminder, this video is for education only and is not financial advice. Always do your own research before making any decision. If you enjoyed this breakdown, make sure to subscribe for more crypto project explanations and digital asset content. Thanks for watching. I'll see you in the next one.